Well, hello everyone. Today is May 13th, Friday, 2016. And I guess you saw from the heading that there's a few buzzwords. We got stock market, sacred geometry, WD Gann, and the word crash. And the video you're watching or observing now is, I'm going to explain what this is about. Several years ago, I lived in the West Coast in Southern California, and my relationship ended there, so I moved back to the Midwest. And at the time, I had a house, but my son was living in it, so I decided to rent a townhouse. And the townhouse is 2 stories, 2 bedrooms upstairs, and this nice living room downstairs. So for quite a while, I had wanted to really devote some time and study to sacred geometry and the stock market, and particularly utilizing the information I had garnered and learned from W.D. Gann. So I converted my living room into all these different charts and numbers and the stuff you're watching in the video now. And what my goal and purpose was is I took about 6 months out of my life to do this. And I devoted considerable energy in this task, and I was very committed and very dedicated, and I had studied W.D. Gann, I guess probably close to 30 years now, and he didn't ever use the word sacred geometry, although that's the study I consider over the years that I have learned, and that's a whole nother video, but it has to do with sacred geometry in relationship to the movements of the stock market. And I studied different stock markets, but the one I really focused on was the S&P, and that's where I devoted my numbers and my time and energy was to the movements of the S&P index. And I found many interesting things over the course of time of endeavoring this study. And I just wanted to share a couple of things that would be helpful, I think, to somebody, and it's been helpful to me. And that is, well, I guess I'll go back to 1987. And in 1987, there was a huge stock market crash, for people who remember that or who have studied it. And I think there was one day in particular, the market collapsed 22% in one day. And I remember that day very well, and I remember that time. And I was in Dallas at a store doing some sales with the store, and they had their radio on really loud, and everybody was, listening intently to the market just collapsing, and it was quite an event. So as I continued my travels, I was living in Colorado at that time, so I went back to Colorado, and I thought, I really wanted to understand, or do my best to understand what had taken place. So I went back to Colorado. I took off my work for close to 3 months, and I bought these charts from a place in Chicago who will customize charts, large charts that you can do whatever you'd like to do with them. So I bought an S&P chart, and particularly a Dow Jones chart. And on that Dow Jones chart, it was about a 50-year chart. And I remember I went back and I found the beginning of the bull market, which I determined to be June of 1982. And it was, the way I determined that is, and I forget the exact date, it was around June 19th, June 20th of 1982. It was what's called a Gann signal, a buy signal, a Gann buy signal. And that's when the market opens lower than yesterday's low and closes higher than yesterday's high. And that would be a buy signal day. Well, there was a particular time in June of 1982 that it was a really intense and obvious buy signal day. And sure enough, that was the low of that bear market, and that's where the reversal took place. So this large piece of paper I had that allowed me to draw lines and angles off into the future, I drew a 45-degree angle from that low of June 1982. and it's a 45-degree angle that went off into the future. And for the first couple years, from 1982, 1983, on into 1984, the market pretty much used that 45-degree angle at its base. Then it began to really rally way above that 45-degree angle. So by 1987, it was way above that 1987. 1987, it was way above that 45-degree angle. And so when that crash occurred, in actuality, what it did is it collapsed back to the 45-degree angle. And it went slightly through it, and then that was it. And it was about a 45% crash. And according to W.D. Gann, it's not a bear market till it closes below 50%. Any move of any kind closes below 50%. So I figured that this was not a bear move, although a lot of people called it that. It was really a huge bull correction. And the fact that it went back to the 45-degree angle was indicating that now it's back on time and it's on schedule again. And so for the next year or two, it just kind of snaked up that 45-degree angle until it started to rally way above that 45-degree angle once again. And so if the market was moving in complete unison, it would just travel that 45-degree angle every day. Of course, the markets don't move that way. They move with hope and fear due to people's excitement and depression around the market. So the time and space polarity, changes a lot. But it will come back and be back in sync and come back to the 45-degree angle. And then, of course, it went on, and we got up to the year 2000, and we had the dot-com bubble. And I remember I was in Houston, Texas, when it was the first trading day of April, which is a Monday, so it's the first day of the new month. It was the first day of the new week, which is a Monday, and it was the first day of the new quarter. And on that day, it opened higher than yesterday's high, higher than last week's high, higher than last month's high, and higher than last quarter's high. It did all this in one single day. And by the end of that day, it had collapsed. And it closed lower than yesterday's low, last week's low, last month's low, and last quarter's low, all in one day. And that was like a Gann sell signal out of a textbook. And I remember that night eating dinner with some friends of mine and telling them, well, the bull market's over. And of course they said, oh, that you're really overexcited here, Houston. And of course what happened is the market did rally back, but that was the beginning of the end of that bull market. And it took several months for it to really unfold and continue its collapse. But that was a classic Gann sell signal. And you rarely do you see a sell signal quarter even, all in one day. And then we moved forward until we had the mortgage-backed security collapse in 2007, 2008. And then we kind of fast forward to today. And today, the stock market, I can look up on my phone, it closed down today. But the last few weeks, the market's been moving kind of sideways. It's up closer to its all-time highs. The S&P closed at 2,046 today, and its all-time high is 2,134, so it's within a few percentage points from it. And right now, there's no indication it's going to collapse tomorrow. But what I really wanted to share with people is an understanding that most people don't have about markets or even about their own life, or about people in their life. And that has to do with cause and effect. And Gann had this saying that the future casts a shadow on the past. And the past is actually the present that you're looking at right now. And it's kind of a mind bender when you think about it. But it has to do with events that are going to happen in the future will show themselves in the market now and it would be unexplainable to some degree. Like the week before 9/11, the market was absolutely collapsing. And I recall on the Friday before 9/11, that whole week, and I was traveling on the road, and that Friday before 9/11, the market closed on the absolute low of the week, and it was just collapsing day after day after day and closed on the absolute low. And I was thinking, wow, something big is about to happen. I had no idea what, but I knew it was going to be a big event, so big that it would affect our stock market. In fact, I remember calling a couple of people I knew up and said, wow, this is a Gann sell signal. Something huge, an event of some sort of great magnitude is going to take place. And I remember waking up Monday morning. I was in Golden, Colorado, and I looked at the market, and nothing happened on Monday. It was like almost dead. And of course, Tuesday morning was 9/11, and the rest of the story you all know about. So the market will give us signals about when this crash is going to happen. And I have a chart that goes back to 1794. And using Gann's system, you use different types of angles. It's geometry. And I call it sacred geometry because I study a lot of other areas of sacred geometry, and I've applied it to the stock market. And in general, you could classify people that study the stock market as fundamentalists or technicians. And certainly, obviously, I consider myself a technician. But I just don't consider myself a regular technician. I consider myself an esoteric technician. And what I mean by that is that cause and effect is well and alive in the stock market. And the saying that Gann had about the future cast a shadow on the past, and the past is what you're looking at now, is a cause and effect type of phenomena. And that for each individual, each person, cause is thought, and effect is a physical manifestation of cause. And when you look at the stock market, it's obviously a multitude of people who are participating in the up and down movements of the stock market. And as far as the saying that Gann has about the future casting a shadow on the past, is that it's an unconscious activity of mass consciousness that's causing the market to sell off. And most people don't even know why. It's like a wildfire. It's like, somebody standing up at the movie theater and yelling fire, and everybody's trying to get to the exit, whether they don't know if there's a fire or not. But there's a panic. And right now, at this moment, we don't have such a panic, although I can assure you we will one of these days very soon. And according to the chart that I have that goes back to 1794, the time period is June of 2016. And again, it's right around the June 20th, the summer solstice time period. And that's when I'm thinking something is going to reveal itself. I couldn't tell you what, but I certainly have a couple guesses. And, I do study a lot of the various things going on in the world and the market. And of course, the thing that stands out the most to me right now is the derivatives market. And I did jot down from USA Comptroller recently indicated the 5 top banks, and I just want to put this in perspective for everybody, that Citigroup has assets of $1.8 trillion. They have a derivatives exposure of $53 trillion. JP Morgan Chase has assets of $2.4 trillion and a derivatives exposure of $51 trillion. Goldman Sachs has assets of more or less $1 trillion and has a derivative exposure of $51 trillion. Bank of America has assets of $2.1 trillion with $45 trillion in derivatives, and Morgan Stanley has assets of $1 trillion with $31 trillion in derivative exposure. So that Give or take, that's around $247 trillion just in the United States banks. That doesn't count European banks or Japan banks. $247 trillion, not billion, $trillion in derivatives exposure. And when you think about the entire GP, the gross national product for the entire planet in a year is around 78 trillion. So when you take the European banks and add up to the American banks, it's over $500 trillion. So it's like 600% higher than the entire GDP for the entire planet, the whole world economy. So we thought the bubble and the dot-com bubble was a big bubble. And we thought the real estate bubble was a big bubble. There's been no bubble in history that will compare to the derivatives bubble. And when it explodes, it will be a financial weapons of mass destruction, I guess is the best way to describe it. And it will turn into a bear market. So for those who do kind of follow the stock market and all that, I would just urge you to start looking for what I consider sell signals. They oftentimes happen on a Monday. Oftentimes they happen on the first day of a new month, and sometimes it will coincide with a Monday, or the first trading day of the new quarter. And you look for something that opens higher than yesterday's high, opens higher than last week's high, and oftentimes higher than last month's high. And at the end of that trading day, closes lower than yesterday's low, last week's low, or last month's low. So this is just a little short synopsis of the time period to pay attention to, in my opinion, is June of 2016, to look for something significant to take place in the stock market, which will then give us greater clues about how to move forward in preparation for our life. Thank you for listening, and that is it.